Welcome back to Alpha Recap, your aftermarket wrap from stockalpha.ai. We're coming to you after the close with a packed slate. Regulatory headlines set the tape, and heavy flows amplified moves across ETFs and some active names. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today. Apple, Meta, and a big internal memo from a major bank all made headlines. And then we had some hefty volume in chips and leveraged ETFs. So, what really stands out here is how regulation and flows were basically tag-teaming market action.
Exactly. Let's start with the regulatory and legal headlines, because those were the tone setters. Apple told investors that a proposed Canadian bill could force it to weaken device encryption. That's not just legalese. It touches product design, user trust, and even how the company differentiates its devices.
Right. And the practical takeaway is simple. When encryption rules change, it can affect how consumers view security, and analysts note that could, over time, feed into demand assumptions and valuation models. I mean, when you step back and look at this, that's a meaningful risk for a company that sells privacy as a feature.
And then, Meta reportedly filed a legal challenge in the UK over fees tied to the Online Safety Act. So we had another big tech name essentially saying, "We'll test the regulator in court," which adds uncertainty to ad-facing forecasts and legal expense assumptions.
Totally. When a large ad-driven platform pushes back on fee structures, it can change the cost profile and potentially the margin outlook, at least in the near term. Analysts will be watching legal costs and how much management has to spend defending or reshaping policy.
And we can't skip the memo from JP Morgan that flags prediction markets and cautions staff about compliance and insider trading risks. That was an internal signal that operational oversight is live again. Not just in policy headlines, but inside big institutions.
Yeah, that tracks. Increased internal controls or restrictions on staff trading can create friction, and market watchers note that could introduce short-term volatility for bank stocks, especially if the memo leads to public statements or formal policy changes.
So put that together. Apple, Meta, and JP Morgan, and you've got cross-sector regulatory tension. Tech, finance, and policy bodies all creating headline risk at once, which tends to widen trading ranges.
And that's important because wider trading ranges mean more headline-led repricings. Analysts note that markets behaved like they were reacting to news flow, not just fundamentals today.
Okay, shifting gears to flow-driven volatility, the other dominant theme. We saw elevated turnover across ETFs and certain equities, which means price moves were often flow-sensitive rather than purely fundamental.
And one name jumped out as more demand-driven: Intel. Intel rallied, up about 4.5%, finishing near about $113 on heavy volume, roughly 154 million shares. That felt like conviction buying, rather than just a mechanical ETF move.
Big move for Intel. By contrast, several leveraged and small-cap linked products had sharp moves that likely reflected directional flows. For example, the small-cap bear leveraged ETF fell by about 4.33% to about $4.50 on roughly 200 million shares. That's the kind of move that signals heavy positioning.
Yeah. Leveraged products can magnify moves in both directions, and when volume is that high, reversals can be abrupt. We also saw a crypto-linked ETF down about 0.33% to around $11.14 on heavy turnover, and another leveraged product down about 1.75% to $2.23 on strong volume.
Nokia also registered participation, down about 1.75% to about $13.19 on roughly 120 million shares. So the theme was clear: big liquidity, big moves, and a lot of flow-driven activity.
Right, and the lesson for traders and managers is practical. When execution volumes spike, slippage and trading costs rise, and margin or position sizing guardrails can get stressed. data suggests risk management just became more expensive for some players today.
Short reaction.
Big volume day for sure.
And another short one.
Flow over fundamentals in spots.
Let's hit the analyst notes and corporate events. Deutsche Bank cut the price target on Danone after a baby formula recall, a reminder that operational shocks translate quickly into valuation changes in consumer staples.
Truist reiterated a hold on Costco, highlighting valuation tension. So even with decent business metrics, when a stock is rich versus the bank's target, coverage can keep returns in check. Analysts are quick to reprice on headline events.
On the corporate calendar, Viatris is set to present at the Bank of America Healthcare Conference on May 12th, a near-term event that could be a catalyst if management offers new guidance or updates. Chatham Lodging filed an 8K with percentage figures that matter to ownership models, which is more procedural but can create volatility as investors pass the math.
And a small note, Certus Solutions marked its 16th anniversary. Not market-moving, but it signals persistence in healthcare IT developments that eventually feed into payer and provider dynamics.
Sector checks. In healthcare, Viatris's presentation is the watch point. In consumer staples, Danone's recall is a headline to follow for sales cadence and guidance updates. And in financials, there was reporting that the Canadian regulator, OSFI, sidelined a high-end climate scenario called RCP 8.5 for stress testing work.
Let me unpack that RCP term quickly. It's a climate scenario used in modeling extreme outcomes. OSFI is the Office of the Superintendent of Financial Institutions in Canada, and if they shift which scenarios they use, that can change how banks and insurers model risk and capital needs. So investors in Canadian financials should watch for clarification.
Good plain English explanation. Now, pulling back, there were 4 emerging patterns from today's briefs worth emphasizing. Regulatory and legal risk was front and center across tech and finance. Flow and liquidity amplified price action. Analysts were quick to reprice on operational shocks. And event calendars, even routine presentations, mattered more than usual.
Yeah, that sums it up. I mean, when you step back and look at this, the interaction of policy headlines and big flows creates an environment where headlines move markets quickly and sometimes temporarily.
Quick checklist for market participants. Monitor official filings and court notices for Apple and Meta. Watch next day volume and open interest in the leveraged ETFs that move today. And see whether Intel holds the $113 area on follow-through volume. Sustaining that would matter for chip sector momentum.
Also, look for OSFI or Canadian bank comments on the RCP 8.5 reporting, and mark Viatris's May 12th presentation on your calendar as a potential short-term catalyst.
What should listeners watch tomorrow? First, any public response or clarifying language from Canadian lawmakers or Apple on the encryption bill. Second, filings or public comments from Meta and the UK regulator as the legal challenge unfolds.
Third, any follow-up from JP Morgan on compliance measures tied to prediction markets. If the bank publicly tightens rules, that could be a headline. Fourth, volume and price action in the ETFs and ETNs that moved today. Persistent, heavy flows would raise broader liquidity questions.
And finally, earnings, guidance, or analyst updates on Danone and Costco as the street digests the recall and valuation narratives.
Before we wrap, a couple of quick takeaways. Regulatory friction is cross-sector and is driving headline risk. Flow-driven trading can dominate short-term moves, especially in leveraged products. And official filings and follow-through volume are the clearest signals for whether moves are durable or just noise.
Yeah, analysts note that in this environment, patience and focus on official disclosures matter more than hot takes. Honestly, I was a bit surprised by how much ETF volume we saw. It really amplified the headlines.
Same, made for an active close. Quick reactions.
Regulation plus flows equals wider ranges.
Watch filings and volume tomorrow.
That's our recap for today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.